Hey everyone, thanks for tuning in to this week's edition of Market Insights. I'm Steve Fernandez. Today's topic I'm going to cover is the Bitcoin ETF that just launched in the US, just started trading on Wednesday, so it's pretty timely. I don't want to talk so much about the ETF or even the mechanics behind it, but more so about why you should be excited about this event, why I'm excited, and what this really means for the crypto market moving forward. So before we get started, if you haven't subscribed, definitely subscribe. If you like our content, hit the like button, and if you don't, leave a comment, and we take that very seriously. So the ETF that launched, it's not actually a Bitcoin ETF. It's actually a Bitcoin futures ETF. It's called ProShares Bitcoin Strategy ETF, symbol BITO. Now, because it invests in Bitcoin futures, it may not directly impact the price of Bitcoin. But nonetheless, investors were excited about this. It actually saw $1 billion worth of trading volume on its first day, and that's the second highest of all time. So a lot of optimism around this event. And even the price of Bitcoin did rally in anticipation of this. And even after this ETF began trading, you can see here that Bitcoin touched almost 67,000 on that Wednesday, and that put it up over 60% in a month. Now, again, I don't see this as an event that will directly impact Bitcoin's price, but I do see it as bullish, and I'll talk to you about that here in a second. So why would investors be excited? Well, this is an investor sentiment event. In general, this could attract new investors to Bitcoin in some capacity. You have new investors that want to gain exposure to Bitcoin that weren't able to do so before, whether that be because they have a brokerage account or, like a retirement account, or even an institution that wasn't able to invest in Bitcoin. Now, as some of you might be aware, there is currently a Bitcoin, tradable product in the U.S. markets called GBTC. That's been around for several years now, but it's not actually an ETF. It's actually a exchange traded note, an ETN. So with that, that's actually prohibitive to some institutions. They aren't able to invest in that. And even if you are, it has like a 2% fee associated with it, and it doesn't even, trade up to the value of its holdings. So there's definitely some risk and some flaws with that product. But with the new ETF, now you can invest in, Bitcoin futures, and, because it's an ETF, new investors can buy it, which is, good news for Bitcoin and crypto in general. Now, that's why investors might be excited. I'm excited because this is a signal to me, a signal that there is a spot ETF not too far away. A spot ETF is really just one that buys the physical underlying asset. So in this case, it would be an ETF that goes out and buys physical Bitcoin, as opposed to the ETF we just had launched here that buys futures. Now, because it buys underlying assets physically, that's going to drive up the price of the underlying asset when new money flows into the fund. So if there is a spot Bitcoin ETF, or any spot ETF for that matter, because a fund is forced to buy the assets in that fund and it drives up the price, well, it can distort the market cap or the value of that asset and attract momentum investors, or even just spur a momentum frenzy as money flows into the ETF. So there's actually a phenomenon going on where ETFs in general create much more value than they actually receive. So for example, I saw a study where for every $1 that enters an ETF in terms of a net inflow, meaning $1 more than goes out comes in, well, that's going to create $4 in value for the underlying asset. So to put this into perspective, if an ETF has 500 billion in net inflows, that could potentially result in $2 trillion in value for the assets it holds. Now that's a huge multiplier, and part of the reason why we've seen such a rally in like the US equity markets, especially like the S&P 500 heavyweights. Now, if you caught all that, good. If you didn't, just know that it really will boost demand for Bitcoin if we have a spot ETF. I'm even more excited that this is a US ETF. Reason being, 70% of global ETF assets are held in US ETFs. They're the heavyweight in the world. They have about $5.5 trillion in assets. So that's a big number. And I know that there's about 70% of institutions that want to gain exposure to crypto in some capacity in the future. So it's not unplausible to think that about 10% of that could make its way to crypto in the next 3 to 5 years. Now, if there's a 10% share of ETF assets in crypto, that would be about $500 billion. And again, if there's a $500 billion net inflow, you can assume that crypto's market value, the entire crypto market, could go up, 2, 3, 4x, so trillions of dollars. And that's, if it's a $2 trillion increase, that's double the amount of the crypto market now. So a big increase. Now, I think that Bitcoin spot ETF would be the first ETF that we see trading. The GBTC ETN that I talked to you about, Grayscale Bitcoin Trust, ironically, they actually filed to convert their fund structure into an ETF this week. So I know that there is a push to get that done. We'll see if regulators respond. After that happens, I expect that Ethereum will have at least a futures ETF and likely a spot ETF, just because there's already an Ethereum futures contract that's publicly traded. And really the big picture, I expect that we'll have like an index of crypto assets. So kind of like the S&P 500, there might be like the crypto 500 or the crypto 100 that you can actually go out and buy an ETF and hold those underlying assets indirectly. And again, if we see a lot of money go into that fund, which I expect that we would, it would really drive up the price of the underlying cryptos, probably more than all of us can imagine. So pretty exciting stuff that there's ETFs on the way. I do want to caution you about this one, BITO, the futures ETF that just launched, because it doesn't actually buy the underlying Bitcoin and it buys the futures contract. You are introducing a new variable called a roll yield. And in short, that's really just a lag on the return of the fund because it's a negative roll yield. But that happens because in these futures ETFs, they buy the closest to expiration contract. And then as that approaches expiration or it's about to expire, the fund goes out and sells it. So because it is forced to buy it initially, it drives up the premium for that contract. They pay a little bit more than it's probably worth. And then when they go to sell it, they have to buy a new one and do the same thing. So it actually creates kind of like a negative effect on the total return of the fund. And in most cases, you're better off buying the underlying asset as opposed to holding some sort of futures ETF, as you will. So big picture, probably want to avoid this ETF and just buy the physical or spot cryptos, which we can walk you through if you need help. But it's a lot of options out there. But key takeaways here, I want to just tell you that this is a huge development, bigger than most people realize. And it's not because of the futures ETF, it's because that regulators are loosening their stances on crypto ETFs. And that just means new money and new demand for cryptos is coming. Now, if you liked our content, again, like the channel, definitely like the content, definitely subscribe to our channel, and we will get back to you and talk to you next week.